This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on May 17th, 2013. Our time is 8:41 in the morning Mountain Time. We're on your favorite radio station, but you can catch us online. The shows are archived on Harold's websites, rarecoloreddiamonds.com and HESradio.com. Should mention that we have a podcast through iTunes. Go to iTunes, type in World Financial Report on Radio. We are there. Harold has daily market commentary from his websites on there, along with our shows. You can podcast them through your iPhone, iPad, iPod. Our radio show is portable for you. When it comes to investing in precious metals, there's only one company Harold recommends you use. That is Worldwide Precious Metals, a Canadian company in Vancouver in business for over 10 years. Their website, wwpmc.com, wwpmc.com, telephone number 1-866-623-2002, and Harold's websites, rarecoloreddiamonds.com, telephone number 1-800-432-1022 to connect with him. His auction website is hsfineauctions.com. The next auction is Monday, June 17th, 8 Eastern, 6 Mountain. And we will talk about that a little later in the show. And for those that would like to speak with Worldwide Precious Metals personally and privately who live in Edmonton and area, they are going to be in the Edmonton area in June. They don't have the exact dates yet, but if you would like to sit down and have a personal private consultation with them about hard assets, gold, silver, platinum, palladium, your financial situation, go to wwpmc.com or call them at 1-866-623-2002 and book a time when they're going to be here in June. Harold, it was an interesting week. We continue to have low interest rates, and it seems like those low interest rates could last for a long, long time, although there are those that jawbone that they're not. The bond market is very, very overvalued. You have a stock market that continues to go up day after day, good news or bad news, and it's really not based on the economy, it's quantitative easing. Europe, we see what's happening over there. The stock markets are in turmoil, and they're having real serious problems with their economies. France went into recession. You're seeing other countries sinking deeper into recession. There's high debt in Europe along with really high unemployment. The same for the United States. You have the Chinese economy. It's starting to slow down. Japan with quantitative easing and really fostering currency wars because of bringing down the yen. You also have the United States with a very low growth environment and quantitative easing, $85 billion a month. They say that they're going to maybe slow that down, but if they do, what will happen? There are so many questions out there, and then you add in the geopolitical aspect of what's happening in the world geopolitically. It is a very, very confusing time for those that are investing. And in the diamond market, we'll talk about diamonds a little later, it was a very, very strong week. There were two auctions. Christie's and Sotheby's had outstanding auctions. We'll talk about it. And gold and silver, unfortunately, continued to pull back, correct. And partially, if you take a look, and we have our free weekly newsletter we send out, you can get it through Herald or Worldwide. I did provide some charts on gold and silver seasonality. And if you look at gold and silver seasonality right now, Harold, it's not the best time for gold and silver on a seasonality basis. We're going to be moving into a better time very, very soon. But personally, I don't think the fundamentals for gold and silver have changed one iota. Maybe the sentiment has short term. Everyone very euphoric in relation to the stock market. But I think, Harold, the stock market is a very scary place now. It goes up every day, irregardless of good news, bad news. And when it does pull back, it could be very nasty.
You certainly can. You know, most of the general public are not in the stock market. It's all hedge funds at this point here, mostly. So, you know, the fact is that very few are really able to take advantage of what's happening in the stock market. And you're 100% right, Randy. There are no fundamentals in the U.S. economy at this point that points towards a better economy and a stronger stock market. So, again, I really hate when this happens because it's so confusing, and it doesn't make an awful lot of sense. And again, who wants to invest in markets that are manipulated? Stock markets manipulated, commodities are manipulated. There doesn't seem to be any credibility in the markets at this point anymore because it's all about greed, it's all about stupidity, and it's all about repeating what happened back in 2006 and 7 when the markets absolutely fell out of bed. So these are extremely dangerous times. I know a lot of people are scratching their heads and saying, how in the world did gold and silver drop every single day this week when there was no news in the market that really would warrant that happening? As we're taping the show here on Friday, gold is down 1660 at 1370. Silver's down a quarter, 25 cents at 2254. Platinum, which looks very bullish because of shortages in the platinum market, is down $19 at 1463. And palladium is even on the day at $742. So basically you have a market in gold and silver that has dropped basically every day this week. And what it's really doing is scaring out the speculators in the futures markets. Again, we talk about this every week, and I know it doesn't make sense to some people, but there are definitely two different markets in the precious metals market. On one, you've got the futures market, the paper asset market, basically the futures markets in New York, that are being manipulated down. And then on the other hand, go ahead and try to buy physical silver, and you're going to find that extremely difficult. Not only are you going to find buying physical gold and silver difficult, but you're going to find that the cost of doing business has increased substantially, meaning the spread between the bid and the ask, which is where the bullion dealers make their money, has widened tremendously. So it's hard to get. People are standing in line to get it, and the prices are more expensive. So how does that really warrant a weakening paper gold and silver market? All it really shows at this point here is that because of what's happening on Wall Street and because of what Wall Street is saying about the precious metals markets, gold and silver primarily, it's forcing the market down. And what that does in the futures market, because people are heavily leveraged in futures, is that it forces them out of the market. So what we're really seeing right now, in my opinion, is a cleaning out of the futures markets, getting all the speculators out of the market. Is it possible after that the market is going to rally? I don't see any reason that it wouldn't rally because, again, the fundamentals for gold and silver haven't changed. In fact, in my opinion and many others, it's gotten much stronger. So what we're seeing at this point is that the Federal Reserve in the U.S. is putting money into the stock markets by buying mortgage-backed securities and bonds and things like that, and basically forcing the market higher. What Randy said at the beginning of the show is true. The fact is that there's no real reason for the stock market to be hitting new highs every single day because there's nothing in the U.S. economy that is warranting that. You know, the thing is that the banks are still in huge trouble, and that's a major concern as to what's happening with our money is what the banks are going through at this point, because the banks have really never gotten stronger from when they collapsed back in 2007 and 8. So the thing is that the banking crisis is still intact. On top of that, you've got tremendous amounts of printing of money to the tune of about $85 billion a month or $1 trillion a year. We know that the U.S. doesn't have $1 trillion to throw into the market, so it's being printed. And basically what that should be doing is reducing the value of the U.S. dollar, which is a very weak currency. The problem is that the U.S. dollar this week has rallied very strong, because other countries are reducing the value of their currency, and I guess the U.S. is the ugliest of the ugly, is the nicest looking of the ugly currencies. So at this point, we saw a rally in the U.S. dollar this week, basically sitting at 84.31. It's up 58 cents today, and that could be adding to the fact that gold and silver are dropping. But eventually, this has got to be a positive for the markets, because the weaker the currency markets are, the more need for precious metals like gold and silver. And there's no reason for silver to be dropping to the extent that it is, because silver is not only a monetary metal that responds to inflation and weak currencies and shortages and things like that, but on top of that, it's an industrial metal that's extremely important in computers and in health and medical and photography and almost everything that we do. So again, it doesn't make an awful lot of sense why gold and silver would be dropping as substantially as it is when there's a shortage of gold and silver in the markets. Now, what Randy said at the beginning of the show is also true. Unfortunately, at this point, we're in the weak times for gold and silver. Silver and gold tend to fall off during the summer and tend to bottom out around September, and that's when the markets tend to rally. So again, at this point, just looking at the market and where we could be going over the summertime, unless something erupted to push gold and silver positively to the upside, is that 1250 is heavy support for gold. Right now we're trading at 1370. So 1250 is very heavy support and basically a production cost for gold. If gold was to drop below the 1250 level and stay there for any period of time, you would find that the gold mines would start to close down because they don't want to produce gold at a loss and take a loss on every ounce of gold that they're selling. So you could see that the supplies of gold could dwindle even more, and right now the supplies of gold are weak. So I think that's an extremely positive scenario for gold moving forward, is that there are shortages, and there's no doubt in my mind that gold and silver are still a very strong and viable investment. The unfortunate thing is that a lot of people that are invested in physical gold and silver, or even in leveraged gold and silver, and they watch it, and it's concerning, obviously, because, again, nobody likes to see their investments go down, and the reasoning for it doesn't seem to make an awful lot of sense. On one hand, you've got some of the most brilliant people in the world that are saying to buy gold and to hold on to your gold and silver physically because there's no way that the market is not going to go up. Then on the other hand, you have Wall Street sitting back gloating, saying that, gold and silver, there's no reason for it to be up at this particular point and you want to buy stocks. What unfortunately happens at this point is people get frustrated. Then they look at the stock market and they say, am I missing the next bull market in stocks? And then they're lulled back into the market. The unfortunate thing is that now is not the right time to be in the stock market. It's extremely top-heavy, it's tremendously overbought, and the fundamentals aren't there for the market to continue. But as long as they're printing and printing and printing more money and throwing it back into the stock market, the market is going to go higher no matter what the fundamentals are. There is going to reach a point, like in 1999 and 2008, when the markets are going to plummet. They did it back then, and the reasons for the stock market being at record highs in 2008 are very similar to the same reasons now. It was a lot of money going into the market, then the markets collapsed, everybody got wiped out, and again, now is not the time to be in that market. In fact, most of the general public are not in the stock market. It's mostly hedge funds and those type of investors in the markets at this point. So, again, we definitely want to see gold hold the 1250 level. Just so you know, if gold does break through 1250, $1,100 gold is not out of the question. As far as silver goes, we broke through the 2250 level. Now $21.50 and $21 is the major support levels for silver. And again, we'll certainly see what happens during the summer. As long as you're not heavily leveraged in the market and you're holding onto your metal physically, I really don't see any reason to sell the market at this point. Myself personally, I own a lot of physical gold and silver in the form of coins, and in the form of bars, and I can assure you I have not sold anything. I've been in these markets for 35 years. I pretty well have seen almost everything happen in the markets, and this is not something that's shocking me at this point. Obviously we're upset about the fact that our clients that are in physical gold and silver are hurting at this particular point, but again, over the long term, the next 3, 4 to 5 years, I don't see any way that this market is not going to go back higher. In fact, we could see a turnaround in this market coming in September. So, again, the summer months, a lot of people are traveling, they're on vacation, they're not really paying that much attention to the market, and the markets tend to do their thing. They're very lightly traded. As we get into September, October, just look at the charts and see how the markets tend to react when the markets bottom out in September, October. So, again, looking at some of the most brilliant people in the world, they're still very bullish on gold and silver, and they're accepting what's happening in the market as, again, a manipulated market for the better of what the Federal Reserve thinks is it's good to have a strong stock market, but again, if most people aren't in the stock market, who's really taking advantage of it? It's the very wealthy on Wall Street, and again, that does not pertain to most people. So, again, Randy, at this point, the market looks like it's going to trend a little bit lower. Hopefully, 1250 is very heavy support for gold and 2150 for silver, but if it does hit those levels, we'll reanalyze and obviously let our listeners know what we feel is going to happen further from there. The other scenario is is look what's happening with oil. Oil's up another $1 today. We're back up to $96 crude oil. The funny thing is that every time it gets up to this level, miraculously, they seem to beat down the market. But there's no doubt that crude oil is going higher. And the fact is that crude oil at $96 today could literally be $100 sometime later on this year. And again, we still do believe that we will attempt to see $150 to $200 crude oil moving forward. That's what's happening in the market so far today, Randy.
Connect with Worldwide Precious Metals. This is the company that Harold recommends you use when it comes to investing in gold, silver, platinum, palladium. Most people, they want to invest when an investment is going up. The truth of the matter is the money is made when you're doing the contrary. You're making a contrarian move, buying when it's unpopular. Buy low, sell high. That's the ultimate goal of investing. And now is the time to look at having an allocation of precious metals in your portfolio today if you do not. 1-866-623-2002 is their telephone number. Their website, wwpmc.com, wwpmc.com. And they are going to be in the Edmonton area, and I know in Calgary as well. If you live in Calgary, if you're interested in having them come to Calgary for a visit, give them a call. In Edmonton or Calgary, give them a call. In Edmonton, they'll be here in June. If you'd like to sit down and spend some personal private time with them and review your portfolio, take a look at investing in gold and silver, platinum, palladium, speak with Worldwide Precious Metals, 1-866-623-2002. The website is wwpmc.com. They'll go through all the ins and outs of owning this hard asset market. Peter Grandich is a well-known money manager, and he is a person who's highly, highly respected, not only for his opinion on stocks, but also gold and silver. And he brought up some very good points. The vast majority of so-called professional advisors in the media simply hate gold. Expecting them to rally around it would be similar to going to a Ford dealer and expecting to be told, if you really want a good car, go down the block to the Chevy dealer. And that's very true. I think for those of us who hold hard assets, gold, silver, diamonds, if we watch Bloomberg, if we watch CNBC or the Canadian Business Channel or any of these financial channels, we should not be surprised by the fact they hate us. They hate gold and silver. They love paper assets. They love bonds. They love stocks. That's what they like. So if you're going to be in this market, you have to know, and we've seen this the entire time we've done the show for over 12 years, there will be slings and arrows that come along with owning hard assets. And even when gold and silver were going up dramatically every day, they were still anti-gold. It didn't matter what was happening. So I think you just have to block those people out. You have to know that your thesis is correct if you believe what we do. Currency wars, debasement of currencies. You have countries around the world in financial difficulty. Nothing really has been fixed. And geopolitical trouble. You want to have an allocation of hard assets. In fact, Peter Grandich said, I still don't believe that the secular bull market that's been going on for 12 years has come to an end. I still believe we have a two in front of the gold price before it ends. We're going to get to $2,000 an ounce before there's any decisions on my part about the end of the bull run. It was interesting to note as well that Egon von Greyers, who is an expert in precious metals out of Switzerland, said this week, the U.S. stock market is also booming due to printed money. It has nothing to do with the economic prospects in the United States whatsoever. The U.S. deficit is continuing to increase, and the debt is looking like it will increase by $1.5 trillion. The dollar is temporarily stronger only because other currencies are weaker. Investors are chasing yield in this environment. Junk bonds are now yielding 5%. In 2008, junk bond yields were 20%. This is another sign of hyperinflation that's coming. And he does believe that hyperinflation is now accelerating. We have not yet seen the precious metals react to all this global turmoil. Gold is continuing to recover. Silver is also going to continue to recover from the massive manipulation in the paper market. we could very well continue to see more pressure in the short term, and it wouldn't surprise me to see silver test the recent lows and possibly break those lows, but I expect gold to hold in at recent lows. Despite the recent weakness in the metals, I wouldn't be surprised to see new highs this year. What investors need to focus on is the fact that hyperinflation is coming. This is becoming clearer and clearer by the day, so you must own physical gold and silver and store it outside the banking system. And when you do have gold and silver with worldwide precious metals, it is outside the banking system. Call them 1-866-623-2002 or go to their website, wwpmc.com. Meet with them when they're here in Edmonton. They'll explain to you how their gold and silver is outside the banking system. Harold, we have about 2 minutes left in our segment here, but I think it's time for us, if we strongly believe and have a conviction in our thesis and our opinion on the markets, it's time to tune out the people that are saying that we're wrong, because they were there throughout the entire bull market in gold. And they were telling us we were wrong as gold went from $250 to $500 to $750 to $1,000, from $1,500 to $1,900. We were wrong all that time, according to them. So is it a surprise now that they think that suddenly the bull market in gold is over? They never called it to start to begin with. I don't know how the heck they could call it to end. I'm tuning these people out now, and I'm going to focus on what we believe. And one thing we should say, Harold, you and I, when we do this show, we're not blind. We're not blindly following a market. If this market was not working, we'd be the first to say it's time to get out.
You're 100% correct, Randy. And again, I am with you on this, as with many others, John Embry, and nobody has really backed off on what they felt. Are they obviously upset that this is happening in the market? Everybody is. But the bottom line is that the fundamentals in the market will eventually move this market higher. I've looked at all the charts, and again, I'm convinced that we're very close to what we saw back in the mid-'70s when the market reacted almost exactly to what's happening at this time.
And I remember John Embry from Sprout Asset Management saying many years ago, back in the 70s, so much money could have been made in the gold and silver market, but people got sucked out of the market. And what Harold was referring to, and he's spoken about it before, we've talked about it, had it in the newsletter, is in 1976, gold went down from 200 to 100 before it went all the way up to 850. And those at Casey Research have done an extensive, put an extensive package together, taking a look at that. And if you'd like to take a look at it, we can send it to you free of charge. Connect with Worldwide Precious Metals, wwpmc.com, telephone number 1-866-623-2002. For those in Edmonton, don't forget they'll be here in June. If you would like to sit down with them personally and privately, they would be happy to meet with you. Give them a call, 1-866-623-2002, the website, wwpmc.com. For those in Calgary, if you'd like to meet with them, I'm sure if you gave them a call, they'll be happy to come to Calgary as well. At this point, they're just planning on coming to Edmonton in June. It was a great week for diamonds. In fact, Sotheby's and Christie's had 2 auctions, and the results were really stunning. We'll talk about it as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on May 17th, the long weekend. Victoria Long Weekend here in Canada, 2013 is the year. Our time is 9:07 Mountain. We run on your favorite radio station. We also are on Harold's websites. HESradio.com and RareColoredDiamonds.com have archived shows you can listen to anytime. If you have an iPad, iPod, or even an iPhone, you can listen to our radio show via iTunes. We have a podcast there. Harold does daily market commentary as well. Go to iTunes, type in World Financial Report on Radio. The radio shows are there. You can listen to them anytime. They are portable. Should mention, when it comes to investing in precious metals, the company, the one and only company Harold recommends you use, a Canadian company in business for over 10 years. Go to their website. I was there this week. They have outstanding information on there as to why you should be using them. and their services when you're buying gold and silver as an investment. wwpmc.com, their website, telephone number 1-866-623-2002. They will be in Edmonton in June. And if you live in Edmonton and area and you would like to meet with them, give them a call. They will be happy to book an appointment with you to sit down with you personally and privately and talk to you about investing in hard assets. Before we get to diamonds, Harold's website, and he's recently upgraded it here, hsfineauctions.com. hsfineauctions.com has an auction Monday, June 17th, 8 o'clock Eastern, 6 o'clock Mountain. And we want you to be aware of that. Mark it on your calendar. Be a part of that auction. There will be diamonds, no doubt gold and silver coins. We'll have probably some rings, maybe some jewelry. You never know what Harold will have for you. HS Fine Auctions has just turned out to be a monster success. Go to the website, take a look around, but please remember the next auction, Monday, June 17th, 8 Eastern, and that is 6 o'clock Mountain Time. Harold's website for diamonds, rarecoloreddiamonds.com. And this week, our featured diamond is a 0.46 carat hard-cut fancy intense purplish pink argyle. It is stunning. You can see it on the website. You can see it in our newsletter. It is absolutely amazing. Speak with Harold about investing in that heart-shaped pink diamond from Argyle. This week, 2 auctions, both in Geneva. We had Sotheby's and we had Christie's, and they were pounding the hammer. The big news, Swatch's Harry Winston bought a $26.7 million diamond. And this was a pear-shaped 101.73 carat stone. And this is one of those diamonds that Harold has spoken to us about for quite some time, the D Flawless, the largest flawless, colorless diamond to appear at auction. It beat a minimum estimate of more than 19 million Swiss francs, and it went for $26.7 million. You can see that story in our newsletter, and in fact, you can even see the rough stone and how it was cut. We have auction results from Christie's and Sotheby's in our newsletter, and it was interesting for me to note, Harold, that a lot of the diamonds selling were the D Flawlesses that you've mentioned to us, brought to us first, and the yellow diamonds. The yellow diamonds and the D Flawlesses, and we'll let you talk here for a bit about these 2 auctions and then come back and maybe we'll give a few auction results. But we can, if you want the auction results from Harold, get them, connect with him at rarecoloreddiamonds.com or 1-800-432-1022. But it was a stunning week for diamonds, Harold.
You bet. Very, very exciting, and I'm just so excited about everything happening in the diamond market. First of all, the featured diamond this week is really spectacular. It's a 46-point heart-shaped fancy intense purplish pink argyle. Those diamonds are extremely rare, and even though it's only around a half a carat, that's considered large for an argyle pink. And again, the color on the diamond, as you can see, is absolutely beautiful. Plus, the heart shape is a very popular shape, and it sells very well at auctions. So we're having, as you know, as Randy mentioned, our auction before the summer, and that's coming on June the 17th, and it's going to be an amazing auction. We're going to have a lot of argyle pink diamonds up for sale. So all of you that want to get into the argyle pink diamond market, that would be an excellent time to do it. That's on June the 17th, and it'll be our last auction till after the summer. That particular heart shape is really a beautiful diamond, especially if it's put into a ring or a necklace. At auction, that could sell for an absolute fortune. The D Flawless market is on fire. You know, most people didn't even know what the D Flawless market is. In fact, most jewelers have never seen a D Flawless diamond, let alone a diamond of this caliber. So when you get a diamond that's over 100 carats, it's a pear shape. It's a D Flawless. It's a diamond that's a 1 in 100 million. There's just no way in the world that those type of diamonds are seen by jewelers on a regular basis. So when they do come up for auction, they sell for a fortune. In fact, they sell for way more than what the experts believe that they will sell for. So to get a D Flawless white diamond, you're investing in a diamond that represents 0.001% of the marketplace. That's how rare these diamonds are. And in Europe, they're used as currency. In fact, with the new diamond fund that's coming out, the reason that the banks in Europe are excited about the diamond fund is because they're selling D-flawless whites. So it's, most of the time when you invest in a mutual fund or something like that, you'll look at the track record of the guy who's trading it, and that's when you'll decide where you want to put your money in, to which fund. In a diamond fund, this is the only one that's ever been approved, and it has nothing to do with somebody who's got trading skills, because you don't trade diamonds. They buy these diamonds because they go up by 10, 15, 20% a year. Every year, they never fall in price because there's so few of them available, and they're negative correlated to the stock market. Means if the stock market falls, these diamonds will go up the appropriate amount. So again, to own a D-flawless white is a real coup, because very few people ever get a chance to see one, let alone own one. They're about 10 times as expensive as a normal white diamond would be, and again, they represent 0.001% of the market, and it certainly appears that every time one does come up for auction, they sell for record prices. The exciting thing about this fund that's opening up in Europe, in Luxembourg, is that my company is supplying the fund with all of the D-flawless diamonds for starters, so I know the quantity that they're buying and I know what they're going for. And then the other exciting thing is that they've contracted with us to sell their diamonds at our international auction business, hsfineauctions.com. So we're in the process right now of expanding our auction business to Central America with an office in Panama, in Europe with an office in London, in the Middle East with an office in Dubai, and also in the Orient with an office in Hong Kong. And those should all be done before the end of the summer, and then we will start to auction all over the world. And the reason that we're doing that is our pursuit of high net worth individuals. There's been a definite change in the class of people with money. You've got the very, very wealthy, and then in a lot of cases you've got the exact opposite, the extremely poor, and the middle class is in somewhat of a problematic state. But the fact is that there's so many new wealthy people. In the United States alone last year, there was, I think, 3,200 new millionaires that came into the market in the U.S. And again, when you look at the money that's in Dubai and the money that's in Hong Kong and in London and in Central America, again, those are the avenues that we want to explore for our clients. So we will be opening and doing auctions in those areas, and in actual fact, when we do auctions in London, we'll be able to trade for British pounds, which are worth 40 to 50% more than the U.S. dollar. So you definitely want to concentrate on owning diamonds. There's so many things that are happening that are underhanded in the financial markets, the takedown of gold and silver, the rallies in the stock markets for no absolute reason except the greed of Wall Street type of thing, as the U.S. economy is not doing any better than it was, the last several years. But the fact is that, again, the stock market's hitting records every day. We need to own assets that nobody knows that you own. You need to own an asset like a diamond that preserves your capital, because the fact is that there's very few investments that you can make today that are safe and that you can make money with. And a diamond, not all diamonds, but certain diamonds, will definitely fall into that category. You want to own yellow flawless diamonds because they go up by 15, 20, 25% a year. You want to own Argyle pinks because they go up by the same amount and they never ever fall in value, and the mine that produces them is going to close within the next 5 to 7 years. And then you've got the D-flawless market, which again is the best white market that you can buy, but there's very few of them, and this fund is going to eat up all the supply. The other thing is that in the United States, it appears that people are very concerned that their gold and silver could be confiscated. In Illinois, just a few months ago, a law was passed that allows the government to find out how much individual gold and silver that people are holding. And this was a really major bone of contention here, because people don't want the government to know what they own. But in the United States, what they're very concerned about is what happened back in the Roosevelt days when they confiscated gold. So is it possible that with what's happening in the markets, with the stock markets and with the gold markets at this point, that they have some alternative plans? Right now, nobody trusts what the government is doing. to be able to own an asset like a diamond that preserves your capital because it never ever falls in price, that's reason enough to own a diamond. But let alone the fact that they've got track records, and during times of difficult times, these diamonds have gone up as much as 400 to 500% during 1979 and 80 when we had high inflation and currency wars that were going on at this point. So again, if you look at what the auction results have been over the last several years, you're going to find that diamonds have done better than pretty well any other asset in existence today. We reported a yellow vivid diamond that in 2011 was supposed to sell for $180,000 and it sold at auction for $960. We've seen several situations where D flawless whites were supposed to sell for $3 million and they ended up selling for $9 million. We've seen so many situations where yellow diamonds and D flawless whites and argyle pinks are setting records every time they go to auction. And these are the diamonds that we're offering to our clients. You don't have to be a multimillionaire and buy a $26 million diamond in which to make money. You can buy a $20,000 diamond and make money. In fact, the most important thing right now, even above making money, is keeping your money, to be able to preserve your capital. You know, for the last couple months, we've been basically petrified about the banking situation and what happened in Cyprus. And there's a report in the newsletter this week that said that the money was gone from Cyprus long time ago. They've been hiding it. And the fact is that once you-know-what hit the fan, then all of a sudden everybody started finding out what really happened, and now all the news is coming out. People lost 60% of their money, and the 40% that they were supposed to get back in cash, they ended up getting back worthless bank stock. People are petrified about the banking industry, and we should be, because the banking industry is on the verge of collapse. And if you have your money sitting in the bank, they can take that money when the bank goes under. It happened in Cyprus, and now the stories are coming out. Read the newsletter this week. You'll literally be appalled as to what happened in Cyprus and how the exact same thing is possible to happen here. And the banks have never recovered from what happened in 2006, 7, and 8. So again, you don't want to keep more money in the bank than you possibly have to pay your bills and that type of thing. You do not want to keep more than what the insurance companies are backing or insuring your bank accounts for. In the U.S., it's $250,000. In Canada, it's $125,000. Put some money into a diamond. It's going to preserve your capital. You're not going to lose on it. And then let the market do its thing. Let this diamond do its thing. The yellow flawless market goes up by 15-20% every year, doubles every 5 years in value approximately, and never ever falls in price. If it just maintains its value, that's enough reason to own a diamond, let alone the profit potential, because in 10 years, that $20,000 yellow flawless diamond is going to be worth about $80,000, possibly more than that if we have high inflation, because those diamonds went up 500% in 1979 and 80. So again, just looking at things on a conservative basis. All the markets are iffy right now. You don't know what we're going to wake up to the next day. To put away money in a diamond that never falls in price, that actually goes up more than almost any other investment and has no risk to it, the fact is that that's where some of your money should go. You never put all of your money into one particular market. You should be diversified. But with the fear of what's happening in the cash markets, in the paper asset market, and also in the banking industry, it's a very, very smart move to have a diamond put aside. We're the only company that will not only deliver the diamond directly to you, send you our newsletters each week, our auction results as they happen. We own our own auction business, and now we've expanded our business worldwide so our clients can do even better than what they've done over the last several years. So again, I've never been more excited about bringing the diamond market to our clients, and now that we've expanded worldwide, it's only to the benefit of our clients that own these type of diamonds. And again, yellow flawless diamonds you can buy for now $15,000 to $20,000 in that range. They increase by about 20% a year. They double every 5 years, and in 10 years, a $20,000 diamond will be worth about $80,000 to you. If there's any other investment that you know of that'll give you that type of return with the safety that you have in the diamond market, then please tell me what it is, because I have no clue what does as well as a diamond. And I'll tell you at this point, we've been extremely busy. Not only were we interviewed on the Langolieri Exchange, which is coming up, but also Bloomberg has asked us to fly into New York in July to do a live interview on diamonds. I've had 4 diamond interviews this week by different medias all around the country and around the world that want to know about alternative investments and about diamonds as a class of investment. So if there wasn't an interest, these publications and these TV and radio shows would not be contacting us. In fact, Randy, funny enough, this week I was contacted by the Sun Sentinel here in Florida, one of the local newspapers, to do an interview on Barbie dolls because as an alternative investment, they found that the Barbie dolls went up in value and they wanted to know from us. Well, I did some research and was able to help them, and that article is coming out this weekend. So all in all, the world is interested in this marketplace. Not everybody can afford to be in the diamond market. It isn't for everybody. It's a long-term investment. You want to hold on to them for 10 years or longer, just like with the Barbie doll, for example. One was purchased. The first one came out in 1959. It was sold for $3, and then it was sold at auction for $25,000. What a tremendous return. That's the same thing we see in diamonds. I was out for dinner with some friends. She owned a 5-carat pink diamond that her grandmother bought for under $50,000, and now the diamond's worth $3.5 million. So the longer you hold on to these, the more and more they go up in value. The government doesn't know you own them. They maintain their value. They never decline in value, and you can make a lot of money with them, and the government can confiscate it from you. That's why we want to be in the diamond market. And pay attention to the yellow flawlesses, the Argyle pinks, which are the most sought-after pink diamonds in the world. The mine that produces them is about to close, and then you've got these amazing deep flawless whites that, again, are just the most amazing white diamonds and represent 0.001% of the market. I'll tell you, the Christie's and Sotheby's both had auctions this week. Randy, why don't you bring us up to date on some of the highlights? Because, again, every time we have these auctions, these diamonds are selling for multiples of what the experts think that they're going to sell for.
Let's do that right now. In fact, if you would like to get from Harold the auction results, connect with him, rarecoloreddiamonds.com, or call 1-800-432-1022. Now, this is from Sotheby's, Magnificent Jewels and Nobles Jewel Sale, May 14th, Geneva, Switzerland. And part of the sale, they auctioned off actress Gina Lollobrigida's diamonds, and they fetched $4.9 million. She is still alive, by the way. The money was going to charity. Now, one of the big diamonds that went, lot 585, it was a fancy yellow diamond and diamond jewel, late 19th century. The estimate on it was $1.3 to $1.7 million. It sold for, and this is in U.S. dollars now, almost $3 million. So you can see diamonds with a little provenance do very, very well. We also had lot 470, and this is a fancy, intense yellow diamond, and the estimate on it was $120. It went for $218. We had lot 433, fancy, intense yellow diamond and diamond ring, $115. It went for $143. There was another diamond that really caught my attention as well. And you can see even some of the pink diamonds, even if they're light, are selling for big, big prices. Lot 614, fine, fancy, light pink diamond and diamond ring. The estimate on it, it was around $500,000 to $800,000. It ended up selling for almost $1.3 million. A fine, fancy, light diamond. And then there was an impressive, fancy yellow diamond ring. It was estimated to go for around $300,000 to $500,000. It went for $758,000. And Harold, the list goes on and on and on. In fact, there was a fancy light purplish pink diamond ring. The estimate on it was $1.1 to $1.7 million. It ended up selling for about $1.5. So you can see all of these diamonds are doing so well at auction, including the D flawlesses that you spoke about. And we can send those auction results out to you. All you need to do is go to rarecoloreddiamonds.com or give Harold a call at 1-800-432-1022. And Harold, really, this is the proof in the pudding. When we see Sotheby's and Christie's holding these auctions, We're seeing people bidding in real time and investing their hard-earned money into hard assets, and you can see the prices they're paying, and you can see the vibrancy of a market. And we're seeing that this market is very, very vibrant, and in the long term, based on what's happening in India and China, them moving into investing in diamonds and using them for, obviously, weddings and different special occasions, this market is going to grow over time.
It's so exciting, Randy. I've never been more excited about a market than I am with the diamond market at this time. So, by the way, you brought up the fancy light pinks. Fancy light pinks, the argyles, are so popular now because they're priced right. In fact, on the auction that's coming up, our auction, which is on June 17th at 8 o'clock Eastern Time, we have several of the fancy light pink argyles. In fact, one of them that's coming up for sale is over a carat, and it's a round brilliant, I believe. So, again, these are very soft and beautiful pinks, and anything that's argyle is going up in price. So we're very, very excited about our auction. One thing, though, is that the auction starts at 8 o'clock Eastern, 6 o'clock Mountain. Make certain that you come on board about a half an hour before. You've got to go to rarecoloreddiamonds.com and sign in, first of all, and get your password and your numbers to get in. And you definitely want to come online about a half an hour before the auction actually starts, so you can download the whole program and everything like that. So, again, we'll continue to talk about it as it's coming forward. It's going to be in about 3 weeks or so, but it's going to be an amazing auction. It's our last auction for the summer, and then we'll start up again in October when I get back from Colorado. But, again, what's happening at auction with diamonds is unprecedented. You never see them go down in value. They're selling for fortunes, and that's why we're in the business that we're in. We want our clients to do extremely well.
RareColoredDiamonds.com. RareColoredDiamonds.com, the website. Go to Featured Diamond of the Week. This week's diamond is a stunning 0.46 carat hard-cut fancy intense purplish pink argyle. You won't be able to imagine how beautiful it is unless you go and take a look at it for yourself. When you go to Harold's website, it's really like going to a museum. It's absolutely stunning. The best of the best diamonds, all for you to view at rarecoloreddiamonds.com. And the telephone number to connect with Harold, 1-800-432-1022. Christie's magnificent jewel sale. That was held on May 15th in Geneva. We mentioned that lot 283, a spectacular and highly important diamond. It was a pear-shaped diamond weighing 101.73 carats, and it was the D color, flawless clarity. The estimate on it was, I've heard actually different estimates, 7 to 14 million. I saw another estimate of 19 million, went for $26.7 million. Now, there were two other lots that I thought were interesting. Lot 306, an important diamond ring by Graf. And once again, this is a D color, VVS1 clarity, and the estimate on it was $2.3 million. It ended up going for $4.4 million. Lot 238, a magnificent diamond ring by M. Gerard. And it was set with a pear-shaped diamond weighing 23.43 carats. They said, and this is a D flawless again, the price on that, the estimate $2.4 million, went for close to $3.6 million. And Harold, we could spend the rest of the show going down through the whole list, but the truth of the matter is, what we'll do is get everyone who wants to see those auction results, give us a call. Connect with us at rarecoloreddiamonds.com or call us at 1-800-432-1022. And we have about 1 minute left. But, Harold, it's amazing to me seeing the auction results, as I said to you. The big auction results were D flawlesses and the yellows. And that's what you've really been highlighting along with the pinks for quite some time.
Well, again, we try to give the most accurate information. We try to make the right predictions. And again, with what's happening in diamonds right now, it's certainly one of the most important assets you could ever make. Again, we've been contacted from companies now all over the world that want to do interviews about alternative investments in diamonds. And again, if there was not an interest, they would not be contacting us. So, again, I'm extremely excited about the diamond market, especially in light of what the world economy is at this point. So, again, tune into our seminar on June 17th. Our auction. There's going to be some amazing argyle pinks, and I'm sure everybody's going to have a great time.
Have a great long weekend, Harold.
Thank you very much. I wish everybody a wonderful weekend and a very profitable day.
Connect with Harold at rarecoloreddiamonds.com. Telephone number 1-800-432-1022. Worldwide Precious Metals, the only company he recommends you use when it comes to investing in gold, silver, platinum, palladium. They will be in Edmonton in June. If you would like to meet with them personally and privately, call them 1-866-623-2002. The website, wwpmc.com. Have a great long weekend. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.